Good evening, guys. How are you? Hope we all good. It's been a while. It's been a while. So today I just thought there's some information which I've come across. So for all those who are still struggling, all those who are still not profitable, please pay attention to this video. You simply have to, excuse me, you simply have to pick a pair, pick an asset, depending on what you trade. So what I'm going to show you, I'm going to show it to you on currencies. I'll try to show you an example on indices, and I'll show you an example on synthetics, just to show you that it's almost the same concept. You just need to be patient and to have like certain criteria set out before you actually execute your trade. So what we're looking at right now is NU, 15-minute time frame. This for day trading. For your 10, 20, 30, 50 pips minimum scalps, this is the strategy to use. So I'm just going to look at M15 just to look at the day's data. So probably we'll look at the previous day as well. So those who might be wondering what strategy we use. Okay, on the bottom here, TDI is no longer there. I think my trading view needs to be updated. So if you check here, this is your M15 NU, right? So the day started right here. Okay, I hope you guys can see it. The day started here. So I'm going to zoom in on certain points which I want to stress out. So this is the basis of the strategy. This is based on BTMM. Those who trade BT, MMP, the market makers, there's also some ICT in there. Then there's also like the trading edge, which you just develop as you grow as a trader, right? So whatever I'll be explaining is based on these three. Okay, trading edge, BTMM, ICT, trading edge. So what you want to do is you want to decide what type of trader you are. So mainly if you're day trading, this works though on higher time frames as well. Instead of looking at high of the day, low of the day, you want to look at high of the week, low of the week. So it's basically the same concept. I'll try maybe to squeeze in one example from a higher time frame. Okay, so what you want to do is you want to trade London session, or you want to trade NY session. I believe somewhere here on TradingView, there's a way you can do to show your sessions. If you can do that, you can do that. And if you know your timing, depending with where you are, you should know that the first session here is your Asian. Then it's about 9. That's where you get your London session. So London comes in, sets their high, sets their low. New York comes in, says they're high, says they're low. So what I'm going to explain is going to touch mainly on sessions. So you need to know your session times. So here are the rules. When you are taking your trades, you only sell from the high like 80% of the times, just to make it easy. 100% of the time, sell from the high, buy from the low. That's it. From the LOD, you look to buy. From the HOD, you look to sell. Right, that's the basis of the strategy. So what happens is when the dealer comes in the morning London session, sorry, Asian session, which is the first session of the day, when the dealer comes, they usually consolidate most of the times. But what I noticed this week with most of the pairs, Asian, there was a lot of activity. So the Asian range was huge. So if Asian range is huge, it's hard to see your stop hands or the dealer trying to trap those trap moves. It's hard to see them because they happen within the Asian range. So from Asian, when we wake up, we come to the charts. Normally this side, we come around between 8 a.m. to 9. So from 9, this is the time you come to the chart. So what I want you to look at is when you come to the chart and you see London taking price up, right? You know they want to set the high of the day. So you look for them to manipulate your Asian session, right? The highs, which these are initial highs for the day. So you're looking for manipulation, you're looking for order blocks, you know, all those kind of things. I'm sure we've taught or spoke about order blocks. So I'll just rush into them. So let me try to make these candles a bit longer so that you guys can see. Okay. So when we're coming to midnight from yesterday, you can see price came sort of left this huge candle here. Then they fell into consolidation, started Asian, right? So today, when you come to the charts, if you're trading in London, by the time you come to the charts, probably your price is leaving this area, right? So you might have caught the buy, maybe depending with what strategy you're using. It's still good. All money is good money. But as we wait for a manipulation of the high, which would have been right here. Let me just mark it. This was the Asian high, right? Okay, so when you see price coming up, we're not interested in buying. Many people will be buying, seeing this momentum. They'll be buying. But as we'll be anticipating the dealer to either manipulate these highs by coming up and giving us a pattern so that we can sell from the HOD. The same can be said about the low of the day, right? So when you on the low, you see your price coming to the low. As much as everybody is selling, if you are using this particular strategy, you'll be looking to buy. So this was the earlier lows from the morning, right? So coming to New York session, you can see we manipulated those lows. So this is a clear manipulation. On this one, there was no manipulation, but I'll show you what would have triggered a sell entry here just now. So just to explain, on the bottom side, on the LOD, what you see is the dealer manipulates the first time, they pull back up, they pull back down. So this particular move induces people to start selling, right? You see the dealer breaking here. There's people with sell stops, right? People with sell stops here, those sell stops get triggered. So your stop loss is here, stop loss here, stop loss is here. They take you out. Then they show you that no, your stop loss was tight. You can sell again. You sell, you sell, you sell, you sell. They pull back up. So now it depends with where your stop loss will be. This type of pattern induces more people to sell, right? But check what happens now. With our particular strategy, we'll know that, okay, this is just manipulation happening here. And if you know your patterns, you can see there's also a W forming, right? So what would trigger you to enter a buy when everyone else is seeing a sell? Okay, so your reason for buying, the first thing you want to get is a market structure being broken, right? But what we mean by market structure, if your price was coming down, you know, price hits low highs, low lows, right? It's coming down, it's coming down. So when it gets to the bottom where it creates that W, you want to get a structure get broken. So that's your structure, right? Where you can clearly see that, okay, price turned. So that's your structure. Once it's broken, we have our trigger fingers ready. So what are we waiting for, which is going to give us a high probability entry? What we're waiting for is for price to pull back into an OB, pull back into what is called a fair value gap, FVG. That's ICT terminology. That's the second thing. Pull back and give you a pattern which you know, right? So on that pullback, that's where we look to enter. Then we target 10, 20, 30, 50, 100, or even more pips, depending with the type of asset being traded. Okay, so if you check here, this is exactly what happened. So I'm just going to explain what happened here before I explain what happened earlier in the morning. So those who trade London, you catch the sell, you're done for the day. Those who trade NY, you catch the buy and you're done for the day. So what would have triggered us to buy here? Looking from the M15, you can already see clearly that this push up broke this structure, right? That's pretty much clear. You violated some lows. So for now, your setup is 50%. right, or 60% ready to mature for you to take the trade. Right, you don't start buying here, otherwise your stop loss is to be outside the range. You wait for that pullback. Those who use Fibonacci, you can use your Fibonacci's, use your levels or whatever, depending with what you've learned. So this is where our order block is. Okay, so now we're going to drop to a smaller time frame. You can either use M5, M3, or M2, depending on the platform you're using. So just to see if M5 was clear, okay, M5 we had no, you can see there's no order block. What could have triggered a buy here? All right, let's go to 3 minutes. So remember also, you want to have setups which pay you like 1:3, 1:5. Anything above 1:2 will be a good return. So if you come to M3, you see that when our structure was broken, the price left an order block. This is clear, right? It doesn't get any better than this. You can open anything you trade, any assets, try to look at where the price set the high, where the price set the low, what patterns played out. Most of them are quite visible. You just need to know what you're looking for so that you can execute your trade. So here's a structure, here's a structure, here's a structure. If you can check, this structure wasn't really broken here. So we might have looked at this as a manipulation, then we're looking for the same thing, but this structure wasn't broken. So as you can see, price came and they set new lows after setting these, right? So this structure, visible, this is also a structure, this is also a structure, but what's visible is this one. So our price hits a new low of the day. So you can see this was the lowest price of the day. Then they pushed up, then they pushed up, broke a structure, right? So now you're waiting for them to come back into an order block. So if there's an order block here, even if there's no order block, maybe this will be your last area where the price can come to. It comes with certain variations, which you just have to learn. Probably if you're in the premium group or joint mentorship, then we can have our live trading sessions together whereby you can actually learn as we trade. So if you check here, the price came into the order block, right? I rejected once, so you can start having your entry here. Stop loss goes just below the order block there. So if you are to map out, if you're on trading view, you want to map out your risk to reward. Okay, remember we said we're aiming for 1:3, 1:5, or roughly 20 to 30 pips, just depending with what's being traded. So if you check this move, 1:5 played out right here, right before this move even pulled back for that particular red candle, which is in there. You can see the price actually hit that area, which was 1:5. So if you risk 1%, you make 5%. You risk 10%, you make 50%. That's the kind of math. You go full margin, you risk your full account, you make what, 500%. Right. So basically that's it. So that was the entry for New York. So in terms of pips now, if you entered at 64,730, you looking to count your pips to get 30 pips at around 0.65030, which would have been right there. Okay, so on this particular setup, you could have taken your 30 pips. So once you take 30, start scaling out, take some positions off. Once you reach a certain level of profit, move your stop loss from entry to break even so that you run risk-free trades. If your stop loss is hit, it happens, losses happen in trading. You just have to manage them accordingly. So going back to the morning, we want to see what happened. Okay, what did I do? Okay. Okay, let me try to figure out what I did here. Okay, I hope you guys can see. I don't know what I pressed there. But anyways, going back to the M15, we want to see where our London entries would have been at. Okay, so you can see the setup now from M15. Right, this is how it would have looked like. You could also have targeted this area maybe as a TP, but at times it's always good to take what the market gives you and walk. So if you're targeting 1:5, you reach 1:5, close your trade. You see, you could have targeted this order block as a take profit area, but price missed that order block by a few pips and just started pulling back. So it's always good if you hit TP, you hit TP 1:5 or 30 pips, 50 pips, whatever your target is, depending on the assets, you take your profits and walk. So in the morning, we were waiting for manipulation here. It didn't come. Right, so many people are scared up. We're piling in on the buys here because they came with so much momentum, right? And if you're trading this strategy, you know that as they approach the initial high of the day, there is manipulation bound to happen, right? So what you want to look for, structure. This applies on higher time frames as well. You're looking for the move which broke structure in the last candle, which is your order block. So this particular move down to here broke this structure, right? Which one is the last green candle? From where the move originated, it was around about here. But this whole area for me qualifies as an OB or is order block area. So you can just use this particular candle, right? You can see it right to the T. You can use that particular candle or you can just use this whole area. So it kind of helps you like to try to determine where you're going to put your stop loss. So if your stop loss is there, that's still fine. So when price pulls in there, that was 9:30 in the morning SA time, that's London session. So people were buying, right, thinking it's pushing up, but when they hit that OB or that order block, you can see what happened. From the high of the day, we are selling. Okay, stop loss goes just above the OB. Okay, so you're targeting what? 1:5 was right there. 1:5, and you know you're done. So you're risking 1%, you make 5%, you're risking 0.5. Okay, whatever percentage you're making, you're getting it back times 5. That's 1:5 risk to reward ratios, you can see there. But also you can also target the initial lows for that day. So if you had targeted your initial lows, this trade now becomes 1:9, which would have been actually a good trade, right? 1:9. You can even take profit here because sometimes they don't get right to the low. Just as you saw on the other side, they didn't get right to the high. They can just turn. So you can have you take profit there, which becomes 1:8.5. But as long as you hit 1:3, 1:5, you start scaling out and you take profits. So this was an example on NU. For London session, you can see this is the view on M15. Just maybe you want to take a look at it on the 3-minute time frame, how it was looking like. Okay, so you can see here we're like candles all over the place in that consolidation. So which move broke structure coming from that high? Okay, this was your initial structure. This move broke structure. That was the order block candle. So if you're scalping, you can still sell there if you're up at that time. So that's also a good point to enter your sales. This structure gets broken again. So now this whole area is an order block. So if you map this whole area to the future, you see that it would have been something like that. So your stop loss would have been here, entered them here. Price came, but didn't hit SL. Then from there, it just dropped. So let's say in case you miss an entry, where can you re-enter? Because sometimes timing can be hard. Where can you re-enter or where can you enter after this move has left your point of entry, which was here? So it's the same concept. You're looking for impulsive moves and order blocks in here for possible pullback, order blocks, possible pullback, just like that, as long as the price hasn't yet reached your TP target. So on this particular trade, after this push up, you can see there was this green candle. All right, price dropped and retested, dropped, retested. You could have entered there. Price left another one, pulled down, entered. So this would also have been a best entry. If you're scalping, you can even take profit here because BTMM, that's your 200. We get a cross and a retest. You can still have entered right here. Good point to enter, but the best entry is always to take your sells at the HOD, right? Then take your buys at the LOD. Okay, so I hope that was clear. Open any asset you trade, back test as much as you can using the 15-minute, 30-minute H1 for day trading and using the H4 for your weekly swing trading. It's basically the same concepts. So this was NU for today. The other assets I'm going to look at, I'm going to quickly look at US 500. US 500, the way I was looking at it in the morning, didn't really get much of a good trade in the morning. Okay, this was Asian. So I'm going to try to make it clear for everyone to explain it the best way I can so that all you have to do is to back test. Okay, so we're just going to start with M15 so that we can pinpoint where our high was, where was our sessions. So you know at this bottom now, here, this is NY. Here, that's around, let me see if I can check, 10:45, 9:30, 9:15. So London started somewhere here. This is the time we come to the chart, right? Asian, initial low. Okay, concept is the same. Price is coming up, price is coming up. Where is price trying to reach for? You look to your left, you look for new highs to be set, you wait for a structure to be broken before you pull the trigger. Okay, so when you look to your left, I want to try and pinpoint order blocks which were left by yesterday's price. So we've got this one. From a higher time frame, I think this whole area will be an OB. But just to simplify things, we're going to use that last weekend. So probably when we saw today's highs being violated, yesterday's highs being violated, we were thinking, okay, probably price wants to get to this zone before it starts dropping. So before it gets to the zone, remember the thing, if you're going up, once you get a break of structure, you should know that there is a 80% chance and above that the HOD has been locked for that particular day or session. The high has been locked. You're looking for price to pull back into an OB so that you can sell. Same can be said for a downtrend like we explained earlier. Once a structure is broken, price, you know that price is not going to get to your zone, because sometimes, you know, we look at the same charts and we'll be looking at the same things. These dealers also know that we'll be waiting for price there. So they will move price and leave you waiting while it's the run away with the money. So today's high was here. We want to look at where structure was broken on a smaller time frame. So if you want to look at it from M15, let me just try to make it bigger. I'm not sure about the resolution so that you guys can actually see. Okay. This is a structure, but we'll confirm it on a smaller time frame. This was the break. Where is the order block? This candle here was the OB. Right? Then price from there dropped back to where? Back to the LOD. Then the LOD was what violated. And what did price do? They broke a structure, pulled back, looked for an OB before they pushed up. So I'm going to jump into the smaller time frames. Most of these things I'm trying to rush. So if you don't understand, you might have to like WhatsApp us, then I will try to assist. Okay, this is your low. That's the London low. This is the London high. Right on this candle here. Okay. So when we jump to a smaller time frame, 3 minutes, we need to see where structure was broken so that we could sell. Okay, that was the Asian. Price was pushing up, as you can see, no structure was broken. So if price pushes up and violates, you now start to look for a structure which is broken. This wasn't broken. This wasn't broken until here. Right, this is where this structure was broken. So just to try to make it a bit clear. Okay, I'm just going to mark here. Okay, that's where structure was broken. Once structure is broken, where is your order block? So on this particular price, you can see order blocks. There wasn't like one big move with one little order block in there. It was so many places. So we had this area, we had this area, this area, this area. So you can see the zones are so many. So what you can do is zones are many. This will all depend. There's so many factors, but you can try to use a different time frame to try and figure out where exactly the order block is. So if we go to the 5 minute, let's see if we're gonna have a clue. Not much of a clue there, but what you can also do is, if you are good with Fibonacci's, you can line up your fib, then wait for your retracement. It can be 50%, 61.8. I won't touch into that, but these are like variations. Like I said, the setup is not the same for every asset. It's not the same every day. It just comes with variations, but the whole thing is the same. The whole game plan is the same. So once they lock the high, how do you see the high of the day has been locked? You see it by a structure being broken. So all you have to do now is to try to get the best entry to actually take your trade. So you would have entered anyway within that area where there's green candles, or you could have opted either for this one or you might have opted for this one. Okay, so you can see they didn't get to the second one, but if you are going to use limits, you need to know that there is a possibility they can come to this last one. So that will help you with the placement of your stop loss. Whatever you think that the price will not do, it will do that. So if you feel like it's going to come to the last order block on a certain price movement, be prepared for that move before you enter, so that you can also enter accordingly in terms of size. So for this particular sell in the morning, same concept, stop loss goes just above. So we're going to put it at the worst case scenario where we think the dealer might come to. So remember, your target is 5 pips, or our target is not 5 pips, and 1:5 at least. Okay, 1:5, we go to 1:5 roundabout there. All right, so you can see it's also a clean move. If you were targeting today's lows or somewhere near the lows, which could have been here, or targeting this particular low. So one thing also with targets, let me try to elaborate on that. So if you sell, this is your first target, because they could hit the zone and now start to push up. So this has to be your target. You need to start scaling out there. This area is your target. This area, these are all targets. So if you have multiple positions, you have different stop losses. So your last TP being there. So your one position or whatever positions are left should run to the last TP, which would have given you 1:10. Okay. So this type, I'll touch on scalpers. It will kind of test you on your patience to hold a trade, because at some point you could have thought it's rejecting off the 200. You see, because here this candle was green at some point, but they failed to break structure. So as long as they don't break structure, you should know that your price is still valid to actually continue pushing down. So if you want to scale in, that was a scaling opportunity. This was a scaling opportunity. Okay, it's not so clean, but you get the concept. So from the bottom side, same thing. NY, I remember we shared this setup today. We're looking for manipulation, for price to manipulate today's lows for a possibility to push up. Everybody was selling, most of the people were selling, right? Because we've been bearish, but you should know the dealer also knows that and they also want to make money. So check what happened. The low was manipulated the first time. They didn't break a structure. They manipulated again, continued pushing to the downside. So many people were selling here, right? This was your 330. Many people were selling. I think 330 was from round about here. Yeah. So most people selling, seeing that as a continuation, but look at what the dealer does. They turn back, break structure. Once structure is broken, you know LOD is locked. You now look for entries. So you look to your move to see where your entry is. Right, so on this particular area, I'm going to mark it here. Then I'll show you the area on a smaller time frame. Okay, that zone there was valid, and this zone here was also valid. So just to perfect, to check which zone is actually correct from here, if we drop to, oh, this is actually M5, I thought we were M15. Okay, let me just show you how it's looking like on M15. Same concepts, everything is the same. Okay, M15 price pushed down with one push which manipulated the lows, right? Push back up, structure was broken. We're looking for entry. Drop to a smaller time frame to look for an order block if you don't see it on a higher time frame. So M15, M5, OB is not visible. M3 OB was not visible again. I'm not sure those on M2 if you could see anything visible, but what you can use as an entry, like I said, those who know how to use fibs, run your fibs, you should know that your worst case scenario price can reach into this order block, because this one was visible on M3, right? That's your worst case scenario. Price can come there, but you can still start entering your trade if the price is pulling down to the OB, if you're confident with it. But if you want to wait for confirmation, you just have to wait for certain criteria to be met before you take your trade. So you can also look to your left for any level which price you think price is actually using or might use, right? So once you get a level, you enter your trade, put your stop loss, let it play out. Okay. Once you get into profit, most of the times I usually encourage people to take their stop loss from where it's currently at, put it on a break even and start trailing or scaling out as the price moves in your direction. So this was the trade. Stop loss could have been here. Worst case scenario, let's say you had put it below this order block here. What's your targets? Okay, you're targeting the highs of the morning, which were around here. So at this point, it was 1:2. But now remember, is the trade moves in your favor, stop loss moves, right, under the OB to break even. So if it goes to this OB now, your 1:5 would have been here, right? You can check 1:5. If you're taking profit at the high of the day, that would have been 1:8. If you're taking profit at this level we had earlier, that would have been 1:10, and you're done. If you want to keep following price and trailing, you end up having 1:14. So you can see price is still pushing. So I've shown you guys this this strategy to be profitable on currencies. This is an example on indices. Do the same thing. Nasdaq, if I open Nasdaq for you right now, same thing. US 30, same thing. There's just variations to how the price is manipulated. So now I'm going to try to show you on synthetic indices where I'm going to use V25-1S as an example to explain what's been happening the whole week. Okay, so just a moment, just saw there's a trading opportunity on C1 where we were late on an entry, but I feel like there's enough momentum to see this price push further down, probably to set new lows. Remember, same concepts. Okay, same concepts. Let's see. Okay, each one will see that. I'm just going to show you this setup on C1 and then go to V25 because I want you guys to see that if one can actually be patient and wait for this setups to actually happen, we could actually be a very profitable group of traders. Okay, so what I'm going to do is I'm going to, let's leave it like that. Okay, I'm going to share, stop share. Okay, there we go. Okay, so I saw a sell now. I feel like price will continue to set new lows. We'll check on it by the time we'll be about to finish. So price should break here, continue pushing down, probably get to yesterday's lows. So what I wanted to show you is today's high. Okay. Yeah, some of these, just some markings there. The thing with this one now, I cannot really share it the way I want to because I like trading view. I'm not flexible with moving the charts. Okay, so what happened today? What happened today? We're not going to talk about sessions. We're just going to talk about price action as it is. Okay, so when we came to the charts at about, let's say 9, I'm just using average time. Let's say you get to your charts at 9 in the morning, 8, 9. This might be confusing. Deriv time, I'm not sure now with the timing. If this is the current time or it's 2 hours ahead or what, I'm not sure. But I want to show you something. This was the first high. Manipulated, price dropped. Here we could have caught sells here, right? Then price manipulated the high. This price action is a reversal price action. You look for what we call an intraday reversal, whereby the day was bullish, price has to pull back. If the day was bearish, price has to pull back up to the 50, right? If it's going up, it will pull back to the 50. If it's coming down, it will pull back to the 50. Check your charts. Most of the days, those moves are there. You will see them if you're using BTMM. Okay, so remember this is H1. We're going to go to M15. We want to try and decipher where would have been the best entry. So here it's pretty much crystal clear. As you can see, price was coming up. How do I write? Okay, price was coming up earlier. This is 6:30 in the morning. By the time we come to the charts, price is here. We're looking for an order block, which we really didn't get. So if you don't get an order block or whatever you use doesn't work, just know that the high has not been set yet. It's not locked. Dealer continued to push up. So this is structure. This is structure. The first break and the first sell. I'm not sure if this was going to be caught, but if this is too hard to catch, okay, this is your structure, this is your structure, you can clearly see that this push down broke structure. So you now need order blocks. So this is almost like what we were looking at just now. There's so many green candles. So now here you just have to use your discretion. That's where the trading edge comes in. An edge can tell you to open a trade. An edge can tell you to wait, right? It all depends with what I call trading edge. I believe each trader has got their own trading edge. There's that instinct which tells you that, okay, now you can sell, or now the price can actually move before it gets to a certain OB. So this was the ultimate OB of this whole move, which is this candle here. As you can see, it was being tested a lot of times. If you know or understand price, you know that usually if price is struggling like this, a huge move is coming. This is where we usually go in hard, right? This is just a confirmation, a pullback to this OB. So if you miss your entries here, that was the point to enter, stop loss, price drop to the 200s. Right, so it's either the 50 or the 200, depending on the asset being traded. So this trade would have hit TP, we could be done. This entry I'm entering now here, it's a very high risk entry. I entered it because of my trading edge, right? My trading edge tells me now that, okay, we've got momentum coming from the top side. Now with synthetics, they move a lot. So you might be saying, okay, maybe if this low is violated, price could actually pull back to an order block. Let's say this one, for example, then drop, they could pull back to this order block. All right, after violating here, they'll pull back up. So that's scenario number one, that's scenario number two, once this low is violated. But at the same time, you need a pattern. You need price to drop, push up, drop, violate a zone, then look for a buy, right? That's the only rule if you're buying. So entering now, I'm just entering a high risk trade, knowing that price, there's a high chance it will come to this low, probably violate it, probably come maybe to this area or this area. That's very possible. Or they could ultimately come to these lows from yesterday before actually pushing back up, right? So to determine whether they're going to push up or do what, now you need to incorporate your multi-time frame analysis, which we explain on other lessons. Okay, so this was M15 C1000 crash 1000. I just wanted to show you that you can use this method across a whole variety of things which we trade. Okay, so here this would have been TP1, TP2 based on BTMM. This was also, I think this was yesterday's high, if I'm not mistaken. That line there. So right now we're anticipating price to drop. They could actually come here, even come back all the way to this area. These are synthetics, you know, they can do anything. So if you enter your trade here, you know there's a high chance they might want to pull up to here. So if you cannot hold up to here, make sure it's a small lot or you've got a tight stop. Same applies to here, tight stop, tight stop. So if you get stopped out 1, 2, 3 times with smaller percentages, let's say you get stopped out for 1% every time. So that's 1, 2, 3, 4. You got stopped 1, 2, 3. It's actually 3 times. You got stopped out for 3%. But then the price comes to this zone and you enter again another 1%. Then it ultimately falls. So now you'll be risking 1 to make 5. Right? So that 5% which you will make for this trade will cover the 3 losses and you still close net positive 2%. So that's the importance of price of our risk management in not so many words. If you want lessons on it, just let me know. I'll try to touch more on risk management. So I'm going to quickly go to V25 1S. Not sure if it's this one. It's not. Okay, must be this one. Okay, so what I want to explain to you is the same thing which we're explaining on currencies and indices. Okay, we're going to put our BTMM template so that our charts become familiar. Okay, I want you to look at this. This is now a higher time frame, right? This is last week lows. They were manipulated here. Structure broken, retest, price pushed up, TP, 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 TP. Usually, if you're coming from the low of the week or low of the day, price will push all the way back up to the high of the week or high of the day, being previous, right? The previous ones. So if you're going up, there's a high chance, price will ultimately come to the high of the previous week. So on this example, this was the high of the previous week. If you can see, price almost touched, if I'm not mistaken, if you can see close, almost touched. So if you have your take profit now, it has to be here, so that in case they don't hit the zone or they react off this order block, your TP will be hit. Okay, so I'm going to take this off. I want to show you how price moves from a higher time frame. Okay, I don't know what's up with these lines. What's all these lines on my screen? Let's see. Okay, these lines are confusing now. I don't know what lines are those. But let me see which one are my normal period separators and which ones are not. Let me just see what's on the screen first. Okay, daily high, low. Okay, done. Perfect. So same concept. From the 4 hour now you're swinging, right? Swinging for the week, but I also want to show you that there's trades, those who are day trading or scalping, there's also trades. Those who are swinging and holding for days, same thing. So once this low was violated here, in here, we are looking for a pattern like this. Right, a structure is to be broken to show that this low has been locked for the week. Same applies here. You need to get a pattern like this. A structure has to be broken to show us that the high of the week has been locked. Okay, so those patterns now you see them on a smaller time frame. So what do you do if you're looking at the chart from a higher time frame like this? Soon as this candle closes, or as soon as you violate this low, you start looking at price closely, especially at your lower time frames, right? So what's your lower time frame here? You want to look at H1, you want to look at M15. So for our example, we're going to drop to H1, M15, M5, M2, just to try to get the pattern we're looking for. If you don't get a pattern, you don't trade. Okay, so this is from the 24th, right? So that we don't get too lost. But our price pattern, we want to look for it on the 24th. It's around 4. On the 24th, it's around 8. Okay, M15. Okay, 24, 24, 24. Okay, 24, 8 p.m. So remember now our lows have been violated. We are looking for a structure to be broken. Let me mark it so that it's clear. where does structure get broken? Structure gets broken by this move. So this whole day, we were not participating in the market. If we were not selling probably from here, this structure is broken. You can see by this move on M15, right? Price pulls back to the OB, then sells to almost this low. This move pulls back up, teases on hitting a stop loss, pulls back down to this low, and ultimately this low, right? It's just the same thing I was explaining. Those are the things you need to look for when you come to the chart. Okay. These lows for the previous week have been violated here. Price pulls back, but doesn't break its structure. Creates another structure as it pushes down. That means this low is not yet locked, and this is not yet a buy, right? Until structure is broken by a move, that's when we know that the low of the day, which was ultimately the low of the week, is now locked. Okay, so once it's locked, you are looking for buy entries. Where do you get your buy entries? Same thing. Right here, we are on M15. Because of dragging candles, I think I might not go as low as M5, but I'll try to explain. So your order block, you could find it around this area. Okay. If you go to a smaller time frame, you see it's, for argument's sake, let me just go to M5, but when I explain in the future, you will know what we mean. I won't keep moving on the time frames. Okay, there it is, crystal clear. There is your order block from here. So you can just adjust it. Okay, just put it here. So that's your order block there. Your worst case scenario, this qualifies as an order block, this whole area. So you should know, you could actually, to be safe, put your stop loss here initially before you move it, right? So what happens? Price comes into the zone first time, you can enter there because your stop loss is be either here or it's here. Price comes back again here. Sellers, they are inducing people to sell. But check, it's midnight. We're sleeping, right? Those who are up are the ones who get caught in this mess because most people will be seeing sells. They come for the third time issue with this candle. We all know this candlestick. That's the determining factor. Safe entries here, but you can enter here, stop loss here. Once we start breaking zones, you know we are heading up. Look for order blocks, which you can use if you miss the entry, right? As the price goes up, all you have to do is simply follow it, right? So when we come to the charts, this is 6, this is 9. We come to the charts around this time. This is based on SA time, and I'm just assuming that broker time is almost the same as morning time here. Okay, so if you check here, insert objects, when we come to the charts, where is 9? When we come to the charts, this is the last order block we have, right? You just look to your left. What has been going on when we're sleeping? Oh, the low was set. Mark your chart, right? The low was set. Okay, I missed the perfect entry here. Okay, so what's the dealer doing next? I think this, let me just check. Either this candle or this candle is the one which was respected here. You missed 2 entries, right? There's also a couple of entries in there. You've missed them all. But when you come to the charts, what do you see? You see there's been a push up. Okay, this is the smaller percentage where you can buy at the high of the day. So remember, initial high, initial high, initial high. The highs are being broken. We are in an uptrend. Remember, now this is a higher time frame. We now have our view from H4. So you want to move in line with what the higher time frame is saying. So now instead of selling from the HOD, you buy. You don't buy here, you wait for the discounted price for your rules. Now you need an order block. You enter here. Okay, you enter here. Stop loss is here. As price is pushing up, breaking a structure, where is my order blocks? Where is my order blocks? Where can price pull down to? Right here, they come back, they pull down a little bit, but we are still bullish just because the higher time frame is telling us that we are. So that was the buy entry for that day. This was the 25th. Right, you can see the buy here. I cannot show you the like profit size. Let me see if I can. Okay, I don't know how to count pips here, but that was a 1% move until the end of that day. That was a 2% move. Pips here are kind of hard to calculate, so I won't calculate, but you can see, you can tell from the move that it was a good day. Okay? You can see there, that's the move. The whole day was bullish. So if you had missed that, let's say you come now in the afternoon, what's my higher time frame telling me? Okay, price is broken structures here. Where is my order block? Your order block is this candle. We're going to use candles which are quite visible for everyone. This would have been your buying order block. But like we said, sometimes price doesn't come to your OB. So you need to have your trading edge. As you grow and develop as a trader, that edge will grow within you. It's an instinct which tells you that, okay, this price will not come here. Why? Because maybe I'm seeing there's a rejection on the 50, or maybe I'm seeing a doji, or I'm seeing a bullish engulfing. So let me enter here because this price will come here. They will leave me hanging. Right, this is afternoon now, 2 p.m. as you can see. So you miss this in the morning, you catch something in the afternoon. Do not chase price. Most of the times we want to buy here. We want to buy here. This pullback frustrates us or hits a stop loss. We leave the charts, not knowing that if we mark the charts correctly, we will get a better entry or a better setup. Okay, so this was the 25th, 26th, almost the same thing. Let's see what happens here. So higher time frame tells us that we are bullish. Your first low, when you come to the charts, price is here. Okay, what makes you not sell this? Because now as you can see, there is selling momentum. It's because higher time frame, you are swinging. Remember, the swing traders, swing buyers who bought earlier, they are holding, because this particular setup, we derived it from H4, just to show you that it works on all time frames. So this one falls in our criteria whereby the low is violated, right? So when this low was violated, first time here, they left the structure, came back down. That meant that this new low was not locked for that day. But once they broke structure, this structure was broken. That means the LOD has been set. We're now looking for order blocks. Okay, where do we put our order blocks? We have an order block right there. You can see, guys, you can do it on your charts. Okay, this setup might have taken some time for you to play out because this price played on top of the zone. So sometimes you feel like price will leave without you. It could sometimes, but then most of the times they will come back to the OB. So as you chase price, buy, you feel like price is leaving without you. It's going to continue pushing up. They will frustrate you by taking it back to the OB, as tiny as it is. First touch, second touch. If you didn't enter here, you can still enter here, right? Or you can enter here. These are all areas to enter. Then you just hold. So if you're scalping, you can take profit here. But if you're still in the swing, you're scaling in. Risking this part to gain this part is a good trade for me. I could have taken profits here for day trading and called it a day, right? Because this setup happened at around 1 p.m., 2 p.m., almost 3 p.m. This was almost 4 p.m. And they did come back to retest the 200. So now you need to understand your moving averages. Those using BTMM, you understand this. They came 1350 cross ID 50 setting up and they pinned on the 200. That's another entry. Let's just check if there's an order block which is visible. So remember, now we're on M5. M15 is more or less the same thing. So here for me, this is the order block, right? If you map it into the future, the price almost gets there. But at the same time, you should understand from a higher time frame, this whole area is an order block, right? So now if you put it like this, you have your entry, stop loss. You can still TP here because as the price moves, you move stop loss from here to here to here to here, then wait for your price to play out. Right, price continue to break highs, they breaking, leaving order blocks, giving you chances to re-enter depending with what time you come to the charts. But on my explanations, I'm just explaining London and New York times, right? When we get here, we are now on the peak formation high of the week. James, how do you know that is the peak formation high? There's certain behaviors which the price does. Okay, there's certain behaviors which the price does. How we know that we are on the high of this week? If you're back testing, please, I want you to take a look at this. There's this first high here. Come on. Okay, there's this first high here. They broke structure here. Then for like 2 days, they played on the same area. People sold here, I know. Because people get impatient, they think the price is going to drop without retesting an order block. But check, this is the same concept, but on H4. So this is a swing trade, right? You might have looked for buys here, which is still very valid because this low was also violated, right? Then price pushback. Maybe an entry would have been tough, but on a smaller time frame, there's always something for you. There's a pattern. You could have used these highs as the ones being manipulated. But initially, this setup was being derived from this particular peak. Price dropped, broke a structure. Structure was broken clearly. They pull back up to look for an order block. Then from there, they drop. They're going to drop. You're going to take profit here. You're going to take profit on this low. You're going to take profit on this order block. Where price seems like it actually rejected again, then started pushing up. So you should understand there's a high, an initial low, another initial low, another initial low, another initial low. So as they get violated, there is a setup bound to happen. As they get violated, there's a setup bound to happen. If no structure is broken, then there is no setup. It's as simple as that. Same thing with this move up here. This week, price was almost ranging. Then they broke, came back down. Then eventually they pulled back up to get an order block here. So if you didn't snipe an entry here, you can still enter here, take profit on these lows because price went there. So remember, H4, it's swing trading, but you can drop down to your smaller time frames for day trades and scalps, like I'm showing you now. So the way I'm explaining is this one. You can see our markings there for that push up. You can see we're bullish nicely. Right, who is bullish until we go to this high. How we know that we're about to set peak? We are expecting price to manipulate this high. But like I said, sometimes they don't. If you see now, if you're having this, let me just mark it as an order block, you see that they actually trapped outside that order block. So these are all variations. Right? These are variations to the same thing we just explained. Right, you can see there is your manipulation here. So once you understand that this is manipulation, right, how do you know? Because price is rejected. After this candle closes, that's where you get interested to get into the charts, right? Okay, so we want to go to that day and see. Now we know we're selling, and hopefully, let me just see if this price can get back to these lows, right? So we've got this order block here, which we can all see. If this order block gets broken, then this price will definitely come back to this week's lows, right? You can go to H1, look for levels to TP, you can TP on 800, but there's a higher probability that we can get a chance to actually go short, Okay. Let's go to that day. This day was this was 4 a.m. right? I think it's gonna time up with our morning session. This was the 27th at 4 a.m. I'm going to drop to M15 straight. We said it was the 27th, which is yesterday. Oh yeah, 27th is yesterday. So this move, people were buying, people are buying. Remember, the dealer always does the opposite. Everybody's buying because this is an uptrend. But as we know better now, so we actually do the opposite. Okay. Using our day trading info, we know that this was the initial high. At the same time, this is falling into that order block on H4, right? Or be on H4, this gray zone we marked, right? And for this particular day, this high has been violated. We are looking for a break of structure. Where is structure broken? Clearly on M15, this is your last structure which is visible as the price goes up. Broken, right? Don't worry about missing this whole move, it's okay. But remember, you can also catch this move from a smaller time frame. It can give you an entry. If you get the same pattern, it's just the same thing. Once we break structure, get a pullback, enter, don't hesitate. No matter how much momentum is going up, once it's a violation of a certain zone, you should know that the price will actually go the other side. So as you can see here, the price broke a structure, left in order block. This is clear, right? Left in order block there. That's your entry. Sniper entry. And what happened the rest of the day? This entry was exactly at 9:15. We are on the charts. We're stalking already this move. Stop loss is right here. You enter, you take profit on the 200, which is fine for a day's work. You risked this to make this, or you can TP on the 800 if you're using BTMM. There we go. This price moved in such a way that they never gave big pullbacks to give people chances to enter. They just dropped the whole day until they reached this area. So if you are trailing, once you see a slowdown in momentum, you consider scaling out. This was the last order block. Let's see what happened when price got there. When price got here, it's actually violated these highs, right? Or this level. These are not highs per se, but it's a level. So remember that trading edge. If you are up at this time, you know that from H4, you are selling. There is no reason for you to look for buys unless you are scalping, or unless this move, maybe it happened a little bit earlier around 2, then you can take the trade back to the 50. This is your intraday reversal I was talking about. Most of the day we're coming down, price has to reverse to the 50, right? Okay, so once this level is violated, you can use this as your order block, or you can look for that pattern of hours on a smaller time frame. That's it. Entries here. So price violates, breaks structure, look for an entry. So on this particular one, we got a violation. This was the structure, it was broken here. I want you to check where we could have entered. This is now today, right? Where you feel like your price is not going to come. Sorry, I didn't want to put a trend line there. Where you feel like your price is not going to come, it will. Okay, where did we mark? I'm forgetting. This was the last candle, right? This green candle and the red one, that's our order block. You just draw it into the future. It's basically the same thing. Violation, break of structure. This is the structure. This area is a kill zone for a pullback. Pullback didn't happen here. It's fine. We're sleeping. This 6 a.m. This isn't early hours. We're sleeping. As our setup is cooking, we're sleeping. When we wake up around 9, the price is here. Once you feel like this price has left you and you enter haphazardly, the dealer will pull back to the worst case scenario where you feel like they will never come to. But us, we are different from everyone else. We already know that, okay, we had a level being violated. All we're waiting for is the price to pull back into our OB. And it does that right here. This is 2 in the afternoon. It's okay. You wait the whole morning. If you enter here, you're dead. Because if your stop loss is here, it's hit. If it's here, it's hit. Here, it's hit. And nobody enters and holds a trade for such a big loss, right? Or such a big pullback. Nobody does that. Okay. So if you're selling here thinking that you've been left behind, that's your funeral. If you decide to buy here, same thing, guys. Structure is broken. You need price to retest a visible order block so you can buy. But you cannot buy at this particular point because we are strongly bearish from the higher time frame. Hence, our entry is here and not here, right? So once you've caught this entry at 2, there's no need for you to continue chasing price at 4, trying to buy. You might, because this low was violated. So if you want to scalp a buy, maybe you missed, you can take this, but remember you've missed the best entry, right? So it's all about best entry, high probability entries, and there's riskier entries whereby we're chasing price like what we're doing on C1. So guys, this is me, James with HP Capital, just doing a quick video. If you're not profitable, pick one pair, pick 2 pairs, and I want you to study them thoroughly. Backtest if you can. Check how price reacted on the highs. Just open M15, open M5, M30, H1. Look at how price reacted when it was coming from the high. Open H4. Look at how price reacted when it was coming from the high of the week or low of the week. But hopefully this video is going to help somebody. If it helps you, please do let me know. If you want to backtest with me, pick your pair. Let's do it. Right, those who need further lessons on this mentorship, live trading, everything is there on our website. If it's not on the website, then it's on our number. So if you want more info, just WhatsApp 0813-647-252. Right, if you're outside SA, then it's +27. Don't worry about this 0. It's +27813-647-252. Then if you just send a hi, it's our business number, and admin will assist you, whether it's lessons, whether it's mentorship, whatever you need, it will be there. So I hope this video helped somebody. Right, I hope it helped somebody. So let me just check how C1 is. Remember, we missed the best entry, and this is usually what the dealer does. If you miss your best entry where you think they will not come, they can actually pull all the way back here, then drop. Okay, so if you think that they won't get here, they will get there. If you think that they won't get here, they will get there. But those are all areas where we can actually look to sell. Why are we looking to sell? It's because H4, I feel like, okay, we had our peak formation high initially locked here. So this is price pulling back up. This is structure broken. Price pulled up. They are now reacting here. So I feel like they will pull back down, possibly to these lows. High chance or into the zone. That's why we marked it, and the price is still not yet there. So just check on price, how it closes, how it's moving. But it would be best to check it tomorrow though, because now you see it's late hours, price moves funny. Best to trade it tomorrow, maybe tomorrow morning. You can get a perfect setup with a particular pattern you understand. So here they can react here, they can also react there, right? ID 50 setup loading, so we can have this happening, but long term, I feel like this price is gonna drop all the way. This will be a TP, this will be a TP, this will be a TP, this will be TP. So you can have 4 entries with different TPs, 1, 2, 3, 4. But remember, price has to respect either this zone or this zone. If they break, it's now a different setup altogether. So thank you so much, guys, for your time. Like I said, I'll go into details. I did post. If you see this video on Telegram, please do share it with friends. If you're seeing this video on YouTube, please do like, share, comments, share your ideas as well, because you know we learn with each day. Okay, we just had a spike day. We learn with each day. We learn different aspects of trading. Price always teaches us something new. Maybe you understand what I'm explaining in a different way. Share, right? Let's all share the knowledge. So I'm just gonna take this call and end the session. Thank you so much, guys, for your time. Enjoy the rest of your day and have a very peaceful week and year-end trading career. Thank you.